Hi traders, welcome to Trader Over the Shoulder, and today I'm going to be with Miki. My name is Alex, and I'm going to be picking Miki's brain on everything to do with trading. So last week, I think we spoke about taking trading full time.
Right.
Yeah. Fantastic start to the podcast, and I actually wanted to talk about your biggest loss.
Right.
But actually, yesterday when we were talking about trading, Miki and I, he actually came out with something when I was asking him about growing an account, something that kind of blew my mind. So we're going to take that episode, we're going to push it back for the next couple of episodes. We're actually going to talk about what we talked about yesterday.
Amazing.
So basically, what we were talking about is how do we actually grow an account?
Right. This is like a myth, right?
It's exactly. I think you started off with a 10K account, and I was asking, okay, how can somebody flip that account? How do you grow that 10K account to be what you were managing? You were managing over 300K, 400K. Right. So how do you do that?
I mean, that's the point. When you said yesterday, when we talked about it, and you said flipping the account, taking like $1,000, make it 2,000, etc.
Yeah.
And most people really believe that this is the right way, or they are going to do that, and eventually growing up the account from $1,000 to 100,000, right?
Yeah.
But the truth is, it's not working really like that, because when you're saying growing the account, you're actually referring maybe more to investors, right? I want to grow my account, I'm building my account, I'm buying few stocks and let them grow, right? And let them grow the account. But when it comes to trading, it's a different approach, because in trading, you're not trying to grow the account, you're trying to make money, right? Mm-hmm. So it's not about making from 1,000 to 100. It's about making a consistently profit, even tiny bit of profit, just to make sure that you can, rely on yourself, mm-hmm. that you can handle bigger money or bigger capital, mm-hmm. right?
Yeah. So it's like when we talk about trading for a living, though, how can you trade for a living on a 10K account? You got to make a lot of percent in that to actually to make a living. Most people, let's say $3,000 a month is the majority of what people live on. So right. On a 10K account, it's 30%.
And you can't really expect to make 30%, 40, 50% a month. And the mentality should be, okay, let me take $1,000, right? Let me start working on that, risking, your RPD, the risk mm-hmm. per day, and then understand from this risk per day that I, let's say, $50.
Yeah.
From this $50, I'm actually calculating about 30% to my A+ setups, mm-hmm. right? We will cover that probably in depth in the next, episodes regarding the risk management. But mm-hmm. you don't want to flip your account. You want to build it $5 at a time, $10 at a time, 20, etc. Mm-hmm. And from that point, when you made from 1,000, let's say 500 total, then you can say, okay, I got 6 months of consistently profitable months, mm-hmm. right? I know what I'm doing. I have stats that will back me up. Mm-hmm. Now all I got to do is go and bring more money in, mm-hmm. and not trying really flipping, because it doesn't really work like this.
Mm-hmm. So we've been kind of sold to, I think every new trader been sold to how to flip account in 30 days or
right.
how to flip $1,000 into 10K. And I think even myself, that was the kind of mentality when I was talking to you yesterday. I was like, okay, I've got my portfolio. How am I going to flip this into something that I can actually live from? Exactly. But you say you get the stats. As soon as you've proved to yourself that you can stay disciplined and you can get returns on the money, right. then it's all about finding where you can get.
Yeah, I mean, money is everywhere, right? Yeah. You can go to your parents, you can go to your grants, you can take from the saving account, you can work hard for, 6 months and save some money, whatever. Take other people's money. There are tons of people with money that wants to, to manage their portfolio. So as soon as you will show them that you can be profitable with $1,000 account, they will say, okay, take 10,000. And when you're done with that, take 50 and etc. So most people that actually blow in their accounts trying to flip their accounts, right? Because you're taking more risk on each trade. Now, if you're taking more risk and you're not really know what you're doing, because you don't have stats and you just started trading, but your mentality is let me flip it, then obviously you will blow up your account pretty easily.
Tend to just trade your P&L. You know, sometimes you're in profit, then you're in loss. Sometimes you're in profit, loss. Yeah, I can see that. And for you specifically, how did you go about managing such a big amount of money as a day trader? So you started off with your 10K account. Once you had your stats, then what did you do?
Well, I started growing up from that stat. Started, perfecting the strategies. So I had a lot of times that I sat in front of the computer. So I knew I started to recognize some patterns, stuff that I didn't learn, but just from the experience. Then, building up the strategies that I can work with, understanding more of the market movement, what time is the right way to be more aggressive, and what time sometimes that you need to sit on your hands, stuff like that, building your confidence and the whole, let's say, the whole package of being a trader. And from that point, after I graduated with the 10K, I got someone that gave me 30, and then from there 50, I reached 100. I took a few accounts together combined. I opened, still have the F account in the Interactive Brokers is like a master account, and then you can place sub-masters. And from that point, just growing up, building up, people got to know me as a trader and said,
That's what blew my mind yesterday. Is because, again, we sold all the time, sold that story of you got to flip your account to be able to do that. But when you told me that, I sat back and I was like, wow, that's just so obvious, It's so obvious just as soon as you got stats and you can make profits on a regular basis, and you take that to somebody that doesn't know how to do that and their money is just sitting around doing nothing, then that's how you build the account. You get a bigger account, you manage a bigger account, and you take your part of profits and stuff like that.
And this is the main difference between a trader and an investor. And when you want to make money for a living, when you want to make trading for a living, then let's say you have like $50,000 that you're running. You made, let's say, $5,000. One option is to take the all 5 to yourself, and then you start all over again from 50. The other option, if you only need, let's say, like you said, $3,000, then you leave $2,000 in the account. The third option is basically starting to grow in the account simultaneously. So you trade in, you made 5 on the day trading or the swing trading, but this is your income, this is the living that you're taking from the account. But you also started to open, simultaneously, you open longer term trades, for example, if you want to grow the account. So growing the account is about letting the trades run, long-term trades. But if you want to make it as a trader for a living, then it's taking out the money every single month.
Yeah. And I know obviously the big thing is prop firms and stuff like that. And we're from the Fivers and obviously TradeThePool as well. But before somebody takes that step and actually takes on one of a challenge from a prop firm, you suggest obviously having those stats before, or go straight into a challenge and try that? Because you only really need, like, let's say $300 and you get given an account, you do the challenge and you get given a bunch of money to do that. But do that before, or do that after you've done it on your own?
Today with the funding thing, just go with the funding. It's so simple, really. Like I mentioned in the previous one, it's no brainer. I mean, just go pay this $300. Actually, build yourself. Understand how much money you're willing to invest in it. then let's say 10 times that. So $300, give yourself $3,000 or $1,000. So you will have more opportunities in case you fail. And then you learn, gather your stats, and from there you can get big,
So how would you say to somebody if they've got the mentality of they always want to put on bigger size because they want to get there faster or they want to grow their account faster? Because it's quite hard if you're telling somebody you've got $1,000 and you've made a good trade and all you're getting done is paid you made $10.
Right.
Now, if you do that on a 100K account, that's amazing profits. But on $1,000, it's like, what was the point? You get $10 on a $1,000 account. Like, what was the point? So how do you get over that mindset of putting more risk onto a smaller account and growing it slowly through stats?
So a few things. First, make sure you know what are your A setups, right? The A plus setups. Because then you can, instead of risking $10, you will risk 15, and you will have just a little bit more money on your winning trade. Second, maybe you can take a $10 risk, and you will find in your stats that you can actually take 3 times of your risk, right? So it will give you just a little bit more money at the end, more P&L. The other things that you need to remember is that you're in a journey, right? So I know $10 making $10. It's it's gonna
doesn't feel like anything.
I just said 2 hours and made $10. That's kind of shitty. But when you think it, when you realize that you're in a journey of, let's say, 6 months that you gave yourself, that I will see it every day and I will make $10. But at the end of those 6 months, you could easily find an option to start trading and making 1,000 or 100. So just give yourself this enough space and understand this is a journey, a learning curve, right? So 6 months, definitely something that if you come with prepared to, it will be easier to say, it's $10, but what the heck, I'm doing it for the long run.
And what do you say to the trader that, let's say he's made his $10 or he's made a really good trade and he's feeling very confident, and then he goes and puts on another trade and then loses all of that and he's back to square one? That's kind of the thing that I feel like myself as well and a lot of other people have. When they're overconfident and everything's going their way, then they end up losing everything they've gained very fast. So when you make your, let's say, your $10 or the amount you want to make in that day, do you recommend just to stop? Or do you recommend keep? What would you do for that?
You can play both ways. Either one way, just stop. You reach that goal, that's fine, leave it that way. The other option is, if you continue to trade, just risk lower than that. If you're risking $10 a day, you reach the goal that you wanted, now risk $5, $4, right? So that way you won't really go back all the way after you had a nice run and blew everything up. So,
Okay. So what would be to get somebody that got no statistics, nothing, they've got 10K, they want to start building up their account. How much would you say to risk on a trade, and how much profit percentage should they aim for at the start to build up all those stats? So some people would say, okay, 1%, 2%, which majority of people do, but
this is also a myth, right? Because we're getting into a little bit of the risk management. But let's say, just to answer that, you got to understand first, okay, you got $10,000, right? Now, you got to understand what is how much you are risking for the full day, like the RPD, the risk per day, right? And then from that, just take between 20 to 30% to the one that you feel comfortable with, and a little bit less than that for fillers and B plus. Now, if you don't have those fillers and B plus and A plus, just start small. I mean, even if you have $10,000, you don't really need to risk $100 in a trade. You don't know what you're doing. Why would you spend $100 if you don't really know what you're doing?
Yeah.
So just to make money, but you won't make money because you don't know what you're doing. You don't have stats that will back you up. See what I'm saying?
Yeah.
So start small, $10, $20, $30. Feel comfortable with. Also, one rule that you can play with is if I would lose 3 trades in a row, okay? So let's say I lost 100, and another 100.
Yeah.
How would it make me feel? So do I feel okay? Do I start trading with revenge, or do I jumping out of the building? So try to find the spot that, the sweet spot that you're feeling okay with.
So I've got my RPD, my risk per day. I'm, let's say, gonna risk the 1% of my account, which is the $100.
Right.
And then each trade that I put down, I'd risk 30% of that full risk. So that would be $30 per trade. A setups, I'll risk that $30.
Right.
B setups, $15, and so on and so forth. Until when? When do I start then adding more size, and when do I start after, let's say, I've got 100 trade stats? Or I know we went through that the last podcast, but
yeah, I mean, first of all, run with 100 trades and get a feeling and stats. But other than that, between those 100 days, if you already know your A setups, your A plus setups, and you add a week, 2 weeks of a run, a good run, then you can increase the RPD with as much as 20%. So let's say instead of risking RPD risk per day of $100, you would risk
120.
Exactly, and 30% of this 120.
And would you do the same for a loss? Say you're on a losing streak, you would lower your risk per day?
The same as we have in the TTP plan, so the risk down. So when a trader, all of us had bad consecutive days, right? Trades, days, months sometimes. So when you have that, you gotta acknowledge that first, and then understand what should I do in order to fix that. One, technically, go to the trades, understand what happened there, and the other part is reducing your risk back to 100. Go lower than that, down to $80 a day, right? You need to play with it, and as soon as you realize you're on a roll, you know what you're doing, then give yourself more money to play with. But obviously take into consideration the market at the time, right? If it is more volatile, maybe more markets like stocks that are trading with the market, like NVIDIA and AMD, Intel, Microsoft, stocks like that. And other times when you want to focus on stocks in play, like Twitter a few days ago that had
with Elon Musk, and everybody was so bullish, and then just
I came
back. You took short. Fair enough. That's why having a journal is one of the most important things. I know everybody here, they chat, they say you need a journal, always taking your feelings and everything into account, and you think that's. Again, you think that's the most important thing? That's
the key, but it's not just about feeling the row of, I entered here, got out there, right? At the end, the main juice, the juice of that journal will be how to play with the numbers there to understand which one is the right one for you. So, for example, I know that my best trades are when the SPY, the SPY, the ETF for the S&P 500 is on an outside range, okay? And I know that the stocks that I'm making more money of, it also have like outside range.
When you say outside range, that's just when it's trending?
Trending on a daily chart with an outside range. So gapping up, gapping down, moving from that sideways before that. And I know that the volume that I need when I'm making most money is when a stock has a volume of more than 10 million shares. and the range of the move is between $1 to $5. And when I'm starting to combine those numbers, then I know this is the right one for me, and eventually, if I will keep doing that, I will make more money. So basically,
that's like all of that is like stuck in your head. You know that off by heart. It's
I mean, those are your numbers. You gotta know them. It's like Steph Curry going to shoot a 3-point, right?
Yeah.
He knows where
to set up, where to go.
Yeah, which hand to use before all the stuff that they're doing.
Yeah.
So that's the same thing.
Your journal, you use a specific journal, TradeThePool, isn't it?
Yeah.
You recommend TradeThePool?
Yeah, definitely a super easy one. Also not expensive too. And definitely you can use that. There are others, but I've been using that for a while.
Okay, fantastic. So guys, that's really what we wanted to talk about today. I know there's a lot of episodes we want to do. I think the risk management's a really interesting one we should do.
We'll do that.
Either next or I do want to talk about your biggest loss. That is an incredible story. So we'll either do the biggest loss next or we'll talk about the risk management because that is really important to me and I know a lot of other traders. But make sure you're subscribed to the podcast and keep up to date with everything going on and we'll see you soon, all right?
Yeah, take care, guys.
Take care, guys.